Thank you, Marty. My name is Tyson Halsey. I am zooming in from Charleston, South Carolina. It is nice. The weather is lovely. Please come and visit. It's actually one of the location close to the water and reasonable price points make it one of the most desirable cities, and we live outside. Anyway, this is going to be slightly different than our normal ESG 2.0 panel, where we are really talking about philosophically what is happening in terms of how ESG is evolving, and often discussing energy a fair amount. The three panelists we have today really have transactional companies. And so I'm going to really lean on each of them. And we're going to go through the following order: Julie Kane, then Raj, Kapoor, and Deb Gallegos, and have them do sort of a New York 10-minute elevator pitch on what they'll do. But I'm going to do a quick introduction, because I think that the kind of back and forth that we just had on the last panel exemplifies really the way I think people will see a lot that's interesting, and a healthy back and forth I think will be most productive. Julie Kane is the CEO of Democracy Investments, LLC. She's a former Air Force pilot, worked for Accenture, Wells Fargo product development. And what they're doing is basically a modified ETF based on an index concept of taking the international IFA index ex-US and then overlaying it with a democratic vector. So basically, they want to support democracy and not support repressive regimes that are unsupportive of democracy. And they have an objective criteria, which is laid out through The Economist and the Economist Democracy Index. And so, for example, they emphasize, I have in my notes, they invest in 2,800 individual stocks: yay, Canada, Australia, US, Sweden, boo, China, Afghanistan, Russia, Yemen, and certain countries in Africa. And what they do is they measure things like free speech and the like. And she will be our first speaker, but I'm going to quickly introduce Raj Kapoor, serial entrepreneur. His company, Climactic, is a venture capital company. So they make investments in companies that both are profitable, but also the other vector they're looking at is their ability to reduce carbon. And there's a great interest, obviously, in the environment and stopping the world from burning up, and decarbonization is one of the most direct ways of getting there. He has multiple startups, and he will talk about what their mission is and some of those companies. And our last speaker is going to be Deb Gallegos. She is a partner over at Palladium Equity Partners. They have $3 billion in assets under management. She heads up the ESG and sustainability practice there, and brings that impact across the companies that they are actually buying out. So they actually buy out companies, and typically are looking for companies that generate about $50 to $150 million per year in EBITDA. And with that, we're going to go right to Julie Kane, who's going to basically, through a very clever device, using her fund, will help to drive asymmetric warfare on all those non-democratic countries, which are our geopolitical threats. So she, no doubt, is the most important speaker today. And without any more ado, go ahead, Julie. Tell us about your company and your mission and your fund.
Thank you, Tyson, for that lovely introduction. It's an honor to be here today. As Tyson said, I started my career as a naval aviator, and at a very young age was stationed in countries that are not very democratic. So I've been fueled by this worry and drive, worried for my kids and my grandkids watching the trends across the world. Less than half of the global population lives in a democracy today. And The Economist has done an amazing job of tracking trends across every country in the world. They use 60 different indicators, and they've been tracking it since 2006. About 5 years ago, my partners and I were watching how the all-world ex-US indices, MSCI and FTSE specifically, have been pressured to allocate more and more to authoritarian states over the years. And there was actually a bit of a scandal when the thrift savings plan was going to shift to MSCI, and the White House pushed back and said, no, we're not going to put government employees' pensions into securities that contribute to a surveillance state. And the indices that have explored these strategies over the years are starting to become under more and more pressure. So we designed a strategy where we're not screening out authoritarians, we're just holding them accountable to their country democracy score. So it's basically merging two indices. So again, we're providing the same international exposure at a very low cost, but you're no longer overly invested in authoritarian states. You are investing according to a democracy score as defined by The Economist magazine. Now, interestingly, we formed the company during COVID, and the fund is now just over 2 years old. And in that time, we've enjoyed significant outperformance, 5% relative to the BlackRock market cap only international ETF. And we've had feedback from advisors that they like our strategy, especially in the wake where they're getting a lot of questions about ESG from their customers, that our strategy is transparent, systematic, it's all public data, according to very defined metrics and values. And it brings together, in some cases, clients who have a husband and wife on either side of the aisle. This is something they can agree on. I like to say, where is the big G for government and ESG? Because a lot of the ESG strategies are so focused on the E. They're investing in 2/3 of the solar panels that are created by forced labor. And the entire EV supply chain is dominated by an authoritarian state. Our theory is you should look at democracy first, and therefore you're accounting for human rights, and then do your ESG screens to help undo some of the controversy we're seeing today. And while I think ESG is very well intended, and we used to think you could do well by doing good, now both of those things are questioned with the bear market, where it's not the same as if you're not invested in energy, you're not doing as well. And then all the controversy around how are you measuring the good is something I look forward to discussing with the panel.
That's great. I guess that wasn't China that you were talking about with like Uyghurs and forced labor.
Yes, that's exactly what I was referring to.
Okay, Raj, you're on mute. Why don't you tell us a little about your company, the type Climactic, and the type of investments that you make, and what your mission is, and what
Sure.
your record and all that. You had a good pitch yesterday. Just do the same way. Yeah.
Sure thing. Very happy to be here as well. So what we are is a venture capital fund, and we invest at the seed stage. This is typically when a company has a product and they may have a few customers or customer indications, but not a huge amount of revenue. Historically, seed stage investing in venture is a smaller fund and has a really strong rate of return if you can do it well. Of course, venture capital is challenging, but it's something that I'll talk about, my partner and I have been doing for a while. So what was special about Climactic is we invest in software, data, and services companies. So these are capital efficient companies where the growth of the company causes emissions reductions. So it could be that the software that they're using in the supply chain for EVs causes a reduction in emissions. It could be that it's creating a new product that is low emission or negative emission and doing it. To take a step back, as investors that are interested in this, venture capital success is always around big dislocations. So the first big disruption the most recent one that we've had, which has generated lots of returns, for the limited partners that are invested in VC funds is the digitization of everything. The entire world is digitized. It started with one industry, which was the media industry, and then every industry got digitized. And that creates a lot of disruption, which means new companies can form against incumbents. What we're looking at now, first there is a reason to do this just because we all care about future generations and where we're leaving the planet. And we know the challenges exist today. It's not something that's just going to be out in the future. So impact is important. But as we dug into this in the last couple of years at Climactic, what we found is that it represents a massive financial opportunity. And this is a returns first fund. We use the same screen that we did in general technology for climate technology. And why it's a massive opportunity is because initially clean tech was about just energy, the energy industry, trying to come up with new solar and wind and batteries, and that was very expensive. Policies were unclear, and frankly, a couple of years ago, companies weren't buying as much. There wasn't as much excitement about it. Now, with a lot of net zero goals, in fact, 8,000 businesses around the world have made a pledge to go net zero. That's now 90% of worldwide GDP. Even if half of them are just saying it and they're not going to do it, it's still a huge step forward in terms of their need and desire to get there. And already companies like Walmart, Nestle, Cargill, PG&E, they're all acting on their plans towards getting there. So what we're seeing is that it's much more broad spread. Whether you're manufacturing, food, water, mobility, you need to decarbonize. Buildings, materials, everything. So it brings a whole new class of venture funds. There's over 100 venture funds now that are focused around climate. And we believe that one other piece of our fund that's important is that we invest in companies where there's a business result, not just reducing emissions. If it's just about reducing emissions, they're going to kick the can, especially in this economic environment. So we need to find businesses where they reduce costs, increase revenue, and also the emissions are reduced in doing it. So a little bit on who we are. I have 25 years of experience in Silicon Valley. We're in San Francisco. My partner has about similar. We both are founders. We've created and sold 2 companies each for over $300 million each. And we both have experienced track records as venture capitalists. So I spent 7 years as a managing director at Mayfield, which is on Sand Hill Road, and had a 9.6x track record of realized returns over those 7 years. My partner started Freestyle Capital, and he did that for 10 years, has about a 7.4x track record. So pretty good returns that we've developed. And again, we're using the same methodology here, just applying impact to it as well. We also have Paul Hawken, who wrote the book Drawdown, which is the Bible effectively on how do you reduce emissions and quantified every single reduction in emission. He is the head advisor to Walmart, to Nestle. And so he helps us on investing and keeps us sane and tells us when we think we're making a mistake, and we can debate with him around new technologies. So I talked a little bit about what we're about. One other point that's really important is that people say, what's the solution for getting this planet to net zero? We need to get there by like 2050, according to most scientists. Now they're saying 2040, but let's even just say 2050. We don't think the answer is for the consumer. We're not going to get there by the consumer recycling our way there. You should recycle, but it's not enough. We're not going to get there by forcing consumers to use less energy when we have Africa, China, and India all coming online, finally, getting electricity, getting refrigerators. So asking them to cut back is not going to help. And if you just cut back rich people in America, it's not going to help that much either in terms of the global problem we have. And they're not going to pay a premium for green products. We're also not going to rely on governments to get there. There's a great carrot that we have in America, which is the Inflation Reduction Act. And our companies are taking advantage of this non-dilutive capital. But we're not going to have a price on carbon, I think, in the next foreseeable future. So what we need to do is really focus on businesses, those 8,000 that I told you. So we're trying to come up with technologies or invest in startups that'll help these businesses get across the finish line. Some examples of these companies are, everyone talks about EVs. Tesla's doing great. You've got all the major OEMs going into it. But let's take a look at California. If you look at California next year, EVs doubled what they were predicting this year in sales, and they're expected to go up even more next year. If everyone plugs in their EV when they usually do, which is 9 p.m. at night in California next year, the grid is dead. PG&E can't even deploy capital, let alone they have to go raise capital to solve that problem, because the grid wasn't made for the big load of EVs. So for example, we found a company when we looked at the battery space, what they do is they treat cars like computers, and they manage the charging on behalf of the utility, and the utility pays someone so that they can manage the charging. So they tell the consumer, hey, I'll give you $50 a month off your utility bill, and if you allow me to load balance, which means I'll charge you at a different time than you, so that we can keep the grid not going above peak in doing it. So that's one example of a company. Another example of a company that's really neat is they take CO2 emissions from a textile mill. And this is started by two women that are 25 years old. And they started working on this when they were 15, when we were all out partying and having fun. And they came up with a way to take that emissions using multiple enzymes that they invented and create polyester out of CO2 emissions. So now they're taking pollution and creating a product, which is 35% of the textile industry. So there's a lot of examples where there's win-wins. There's business value as well as other things, other impact that you can have. So I'll end it with, we have a fund. It's a $75 billion fund. We have some of the top institutions like Stepstone, Greenspring invested. We have a number of family offices, the Lauder family. We have Brown Advisory Group, Forest Bay Partners. We have Reid Hoffman, Mark Pincus, Ev Williams, the founder of Twitter, the founders of Lyft. So a who's who from Silicon Valley that are in. And we have, if there's interest from potential investors, I can send out my email. We do have some room, and we're doing our final close in mid-August.
So I think you said you have 65 in and you're raising 75?
Yeah, 60, close to 60 in.
60, yeah. Okay.
We've already started investing. We have 11 companies we put in our own money, 3 companies out of the fund already. Those 11 companies are already up 2.5x in 2 years.
What I'd like to do is actually go to Deborah Gallegos and have her speak, and then come back and do kind of Q&A with the audience, because I think everybody, after hearing them, will have some ideas of who they have questions for, and go ahead that way. Deb is a partner over at Palladium, and she is the head of ESG and sustainability, and they're a buyout firm. So tell us a little about your company and your mission, and how people might want to get involved with you.
Sure. Thank you very much. So Palladium Equity Partners is middle market buyout. We focus on the traditional sectors, industrial, healthcare, consumer goods, and services. I joined about 2 years ago to be the co-head of sustainability. And what we did is we took what the company had been doing historically. They're on Fund 5 right now, $3 billion in assets under management, 38 platform investments, and 160 tuck-ins or add-ons, but taken what they did historically and operationalize it. So we looked at the United Nations Sustainable Development Goals and mapped each one of the historical portfolio companies to those goals to see where we fell out without even trying. It had never been a goal for Palladium to have an ESG bent to it, but we wanted to see how they mapped. And they mapped pretty well. Half of the companies they invested in historically mapped to 1 or more SDGs, half were neutral, and only 1 was negative. So we thought, well, whatever we've been doing right. So let's now put that into practice and make it a work stream equivalent to every other work stream in our processes, from origination to exit. So at the origination phase, there's no go or no go ESG criteria, but we want the analysts to be able to say, hey, yeah, there's a potential for ESG here. Either the management is diverse, or the product has an ESG focus, or potentially attractive to an impact investor upon exit. All the way through the due diligence phase, we've worked in ESG, sustainability, ESG, whatever, stewardship, whatever you want to call it now, whatever the politically favorable name is to it. But we've worked that into the work stream. And we also flipped it on its head from being a risk mitigation tool, which is really what most private equity companies had been doing and most still do, to a value creation tool. So how can we actually add value by putting in place sustainability efforts? We look at it from, as Raj does, from a cost perspective, from a revenue perspective, and from a cost of capital perspective. So a few examples would be on the revenue side, and we do this both for the companies that we're going to invest in and the companies we are currently investing, our existing portfolio companies. From the on the revenue side, some of our portfolio companies supply to publicly traded companies. And in the publicly traded area right now, sustainability is very big. There's a big push to it. And they will actually award contracts to suppliers who have better sustainability metrics. So we've hired a third-party consulting firm to do a sustainability assessment on each one of our portfolio companies, give us a score, give us ways that we can improve that score, and then track that over time. And we have found that, again, some of the publicly traded companies we deal with will award contracts to us over others because we have actually started measuring and monitoring. Similarly, we track our carbon emissions through a third-party group called Green Project Technologies, and work with the clients of our portfolio companies to map their carbon emissions, which they value tremendously. So from a revenue perspective, there are definitely opportunities to increase your revenue just by putting into practice or tracking sustainability metrics. On the cost side, things like moving to EV fleets, we have a couple of companies that are transportation companies. One is a company that transports special needs kids in the yellow buses, but they're a private company. Contracts with all the school districts, moving to an EV fleet. We have another company that contracts with truck drivers, same thing, moving to EV fleets. So reducing the cost, increasing the bottom line. And that's really the way that we highlight this. Yes, it's good. It's do well by doing good, but we're a middle market private equity. We're not an impact fund. We need to show our investors that we do want to do well by doing good. We have clients and limited partners who are very interested in this, but in the end, it needs to come down to the bottom line. And then finally, I'll talk a little bit about cost of capital. We work with credit-linked, sustainable credit-linked finance to try to lower our cost of capital. It's a very nascent stage right now with private credit. Private credit is still trying to figure it out because they're not in control. They can't insist that their portfolio companies put in place sustainability metrics. But if you can show that you're tracking these and improving these, they will award lower cost of financing. So, at 25 basis points is 25 basis points. We'll get it where we can take it. So I'll stop there. That gives you just a flavor of how we do things in a traditional middle market buyout firm. Combining the two, doing well by doing good and making money.
I have two questions for Julie, and then Marty, if you can ask questions or get questions from the audience. I think you see everyone. Julie, BlackRock has been getting some pushback in terms of pushing ESG maybe too hard. I was wondering whether you had any thoughts. And secondly, you had told me yesterday that the methodology you could apply to a family office. This is a family office conference, so that if they have clients who may not want to buy DMCY, and you can talk about that, that's your ETF, that you could actually give them quantitative, qualitative feedback in terms of deploying democracy in their security selection methodologies. And then Marty, go ahead and fire away. Julie?
Thank you, Tyson. I'll address the last question first. So yeah, our current product is an ETF, but we'd like to do an SMA, and we also have an index provider, so we can license our index for whatever strategy you want to do, EM only, DM only, EFA. Our first product is a very simple ACWI-XUS replacement, ticker symbol DMCY on the New York Stock Exchange. All the information for our index is on our website at democracyinvestments.com. And yes, interesting times. Larry Fink was one of the original voices of ESG, and shouldn't we all be focused more on shareholder as well as stakeholder capital? And now I think there are 5 states saying they will not do business with companies that do not do business with oil and gas. I mean, it's really a big hot mess. There's no one right answer. I mean, I think ESG is very well intended, but sadly, there are some strategies there that are just using it as a marketing ploy, and they have not delivered returns. And so there's a lot of work to do without the data clear data to support the right path. So it's a challenge for Deb, especially I would think, like, which data set are you going to use? I mean, I know that MSCI was under criticism for giving high ESG ratings to anti-ESG strategies that only invested in guns and casinos and tobacco, and Bloomberg had a field day with that. So yeah, I think it's interesting times, and BlackRock, I think, will be adjusting their tone. I think they already did in their last letter. But interestingly, I just came across an 80-page white paper from a British NGO, and they called out BlackRock, Blackstone, and Bridgewater for overly influencing investment into China. And they had a lot of and they quantified the impact of that, and it was really it's quite disturbing when you see the roll up of all these index strategies, and in EM it could be 40% in an authoritarian state, and if most investors are not going to go and look at every single security, and on top of that, a lot of these indices also include securities that are sanctioned by the U.S.
Can you make that white paper available to the group?
Sure, happy to.
Just email it to me?
Yep.
Or send it to Tyson?
Absolutely.
So here's a quick question, and so there's this, we're gonna have a guy speaking next week about the schism in the world, where there's this, bifurcation between what we call the West and the global South, right? And obviously there's the BRICS approach, et cetera. So it seems like Europe has no energy in the first place, so they're going in this direction of renewable energy. And then the United States is going along because Europe's our ally, and maybe it's vice versa as well, so we can sell products to Europe. But the countries that really would suffer the most from environmental disaster, China, India, et cetera, are full bore into carbon fuels, right? And so it seems kind of strange, maybe I'm saying, is that we who really would suffer the least in the Western world from environmental consequences are the most stringent, whereas the people who suffer the most are the least stringent and likely to become less stringent or continue their ways, right? So any thoughts on that? And I mean, if you look at a map of the trade partners where China is a leading trading country, I think is it 95% of the countries in the world? And if you look at the map of the countries that have joined the BRICS or are going to join, it's about 60% of the countries in the world, and half the Caribbean and a quarter of Latin America, et cetera. I mean, their own backyard, right? So any thoughts on that from this?
Well, Marty, before you go on that, it's exactly the follow-on, because the Wall Street Journal had an article 3 or 4 months ago on energy transition materials. And this is the next 10 years or so. The baddest of the bad guys are producing any transmission. And so I did talk yesterday with yourself, and the Democratic Republic of the Congo, dictatorship, but they got to put democratic in their name. But they got these artisans where they're like 10-year-old kids, mining cobalt or something like that. And but I mean, the thing that it looks like, and I went to the semiconductor conference last year. It's coming up, Semicon West over in Moscone. And they said, look at the cell phone, how much the big damn cell phone, the little one. They said in 10 years, the EV battery will be much cheaper and will last 1,000 miles instead of, 200 miles if you're lucky, right? So the thing is it seems like this rush to get stuff. Technology is moving so fast. We're going to be throwing away a lot of EV batteries into God knows where and stuff. And it seems like if they just be a little bit more looking at the factual things, over time, we're not going to have to give so much to all these bad guys that are just, raking in. You look at Venezuela oil. I mean, that's got to be the worst oil in the world. Remember when we were doing the oil tanker business myself 40 years ago, it's still bad stuff. It's bad stuff now. I mean, we got a lot cleaner stuff in the United States. We don't need the belching oil tankers and stuff. So it seems like they're almost, the climate guys are so after the United States, but we end up buying from the baddest of the bad guys for everything. So it seems like they need some voice of reason in there to kind of to reduce the amount of pollution short term,
anyways, that's sort of a fun one. Yeah.
What's the bridge between the two?
Yeah, what's the bridge? Yeah, exactly. What's the bridge? Because in this rush to do it, we're just pushing it too far. And if we had proxy voting where these guys wouldn't take all the votes that didn't vote, we probably wouldn't have as stringent of a ESG policy. Anyway.
Want to take that one?
Excellent
Anybody want to
question.
address that?
I would also, so we have all these strategies that are encouraging divestment, complete divestment of oil and gas. 27% of the global fossil fuel reserves are on listed exchanges. That means 3/4 are with state-owned enterprises and private institutions. So you divest of an energy company, what are they going to do? They're going to go private, and then you have no influence at all. So, I mean, for our strategy, and this keeps me awake at night, that which trends the world are going, we intentionally did a tilting strategy. So we come out of oil and gas in Saudi Arabia, and it goes into oil and gas in Norway and Canada. There are other strategies out there where you could have an energy fund that tilts towards the companies that are doing good things with renewables. So BP gets more than Exxon. Then Exxon is incented to change their behavior and be more, but if you just divest or you only invest in the good companies, you're not really incentivizing change. And we've got to stop the trillions that are going into, we are passively fueling the economies of, as you said, the biggest countries that are the biggest criminals in ruining the carbon footprint.
That's the irony of this whole backlash that's going on right now.
Agreed.
If you think about it, because there, should be anti-China, pro-US resurgence and economic growth, but in fact, it's just having the opposite effect.
I don't know how many of you know this, but in California, PG&E set a hard deadline of April 13th to either have a contract for solar or to be grandfathered if you already had solar panels on your roof.
Yeah.
How hypocritical is that? They're changing the true up from dollar for dollar of your extra power on their grid or our grid, all of our grid.
Yeah.
And now it's 25 cents on the dollar if you didn't have a contract in place on April 13th, which I did. My panels will be installed in August because that's how backlogged, because a lot of people heard about this, but most of the country doesn't know anything about what's going on behind the scenes. And that's before the 18% proposed rent increase, or excuse me, utility increase that's coming in the next couple of months. So it's scary out there, and follow the money, right?
Raj, go ahead.
Yeah, I just want to take a step back for a second. I agree that there's tons of challenges. There's ironies that are going on at the same time, but we can't lose sight on the fact that we have a goal that in 2050, we need to get to a net zero planet. 99.9999% of scientists have said, this is what's going to happen. And people were correct in saying that, unfortunately, the underserved are the ones that are going to really suffer the most. So when people ask, what's the solution? It's all of the above. There are no sacred cows here at all. We need to work on nuclear. We need to work on alternative battery materials so that we're not having kids mine in the Congo. We need to work on recycling batteries. There's a company called Redwood Materials just got 800 million to recycle batteries. So the good news is that the innovation economy is going full bore into this because everything needs to be thought of. We need to work on long-term fusion strategies. We need to work on on converting oil, gas, methane leaks. So it's not just ignoring oil and gas. We need to help them reduce their emissions as well. So my answer on it is that, look, not everything is figured out. There's not great metrics right now in ESG, but guess what? That's exactly how every industry evolves. We're in the beginning. It doesn't mean we stop. We don't have time to stop. We don't have time to consternate on it for the next 5 years.
Well, I mean, we don't have time if you believe that data.
Sure,
Right, that
and you
data
can
isn't
question the data,
necessarily-
but
So I
that's
mean,
a different
right, I mean,
argument.
So
The-
right, so I've got a background in mathematics, and I have a master's in artificial intelligence, right, and almost a statistics master. So I mean, the reality is data is only being collected for so many years, and a lot of it's been massaged, right? So you have to question all this data, whether it's the guy from India that said that we'd be under 100 feet of water by now, glaciers are going to melt, but then he found out that he misplaced a decimal place in his calculations, right? So
Well, there's stuff going on right now that you and I can feel.
I don't have a sense of urgency I don't have a sense of urgency for 2050, number one, and number two, you know, with the depopulation of the Western world, why should anybody care? They're not going to be around. I'm just, I'm playing the other
yeah,
side.
I think you could certainly have an opinion about the data being, you know, wrong when it's, I don't know, like 99.99% of the scientists. I'm not gonna, let's not argue that.
I'm sorry. We gotta talk about this. The science thing is highly
Yeah.
influenced by money, right?
Yeah,
Okay.
and then in addition to the equity side, there's also, you can influence the debt markets and lobby.
If you don't lend to
lobby-
people,
Yeah,
correct.
lobby to, it's like, stop financing coal plants. I know
Yeah.
China continues to build them to power their new EVs.
I mean, so the great example is, besides the Democratic Republic of Congo, where they're using child labor and 95% of the people don't have electricity, is 90% of the people in Nigeria don't have electricity. France will not sell Nigeria coal and other types of technology so they have electricity, but 80% of the uranium for France comes from Nigeria, right?
How is that ESG?
Yeah.
I was just wondering if Paul would address, there was a book written several years ago, I consider it a masterpiece, called How the World Really Works by Professor Snow. And he says that not in maybe our lifetimes will we be able to cease to produce cement, ammonia, plastic, and steel. And we touched on that with the developing world. You know, we're going to impose sort of our moratoria on them, and they have not yet developed. So you run into this phenomenon of we're not going to get past those four manufacture of those four substances probably in our lifetime.
I can't see it happening in our lifetime. I can't see it happening in the next generation's lifetime either. But
Well, I mean, I think there's a minimum usage of petroleum products, which is something like $10 billion, 10 billion barrels, right?
but you will
Million
see
barrels a day.
the change in consumer behavior with the millennials. Now that's in this country and in the Western countries. I'm not sure how much of an impact that's going to have on these problems, but at least you will start to see some consumer change, and that's where it starts, right?
I think it's really hard to predict millennial behavior because so much of it depends on paying off their student loans. So
I also think
that's
from
gets
a-
back to how the real
Raj,
world
go
works,
ahead.
right? Is that there's a financial aspect.
So there's a lot of, the good news is that there's a lot of innovation going into low carbon, no carbon steel, into alternatives for ammonia and pesticides and fertilizers. There's at least, I would say, 50 companies working on each of those things. I can't tell you that it's going to work. I can't tell you that, you know, what year it is exactly, but I can tell you that there's a lot of investment going into it. And all this AI power that we have now is going into rapid product development. So I'm hopeful even for those materials. I've seen like 10 startups doing very low carbon to zero carbon cement using electrolysis and all sorts of different things. So I'm excited about the innovation economy. I think it can make a difference here.
I'd make the following comment. I am an economic conservative. I believe that the government is not the best vehicle to create change. So it is investing in companies such as what Raj's his company does, and also working with Julie Kane. I think that those are very tangible ways that you can actually make an impact and really drive positive change, because I'm just not a big believer that government is able to see the future any better than anyone else. And then actually when given the money or the taxes for it, they don't implement it as effectively as the private sector. But Deb, tell us how you fit into that. Deborah
Yeah,
Galvis?
I'm sorry. I went to Humboldt as a forestry major and ended up switching to econ with a minor in environmental sciences, but I am an all energy on the table person. And I am very embarrassed for this country that we seem to have turned our back on nuclear. And I know about Chernobyl. We've all lived through that at 3 Mile Island, but we're better at it now. And I'm very sad to see not much more intelligence and energy and money is being put into that sector. I don't know your thoughts, folks.
Agreed. Yeah, no, totally agree.
How do we
So
take-
I think you're 100% right on that. The good news is that there is innovation and probably at least 30 to 40 companies around small nuclear. The whole nuclear thing was just, I think, hyped in being so unsafe. It's become a lot, especially with today's technologies, it's a lot more safe. It makes sense. It's really more of a public policy thing than it is a technology thing. So I 100% agree with you. The good news is that there is money flowing into that sector. Probably need a lot more than it already is.
Totally agree. Thank you.
Marty, do you want to wrap it up?
I have some more questions.
Go ahead. You
I have some more questions. Hold on a second. So, so we have a guy who's going to be speaking, and he's next week, and he's a professor at a university somewhere on the East Coast, and so he's very negative Europe, and I'm wondering if any of your opinions on Europe are positive, because I mean Europe was heading towards recession before, but this war with Ukraine and the support of it from a NATO perspective has done nothing but destroy the energy, which was the engine of Germany to create incredible value-added products, right? And so I think that European manufacturing is injured over the long term, and then as a result, it makes it hard to believe they're going to come out of recession in a strong way. I mean, if you can't manufacture your Mercedes and BMWs, et cetera, you don't have the energy to produce the steel, you know. So what's your opinion of Europe, and any thoughts? Because they're the leaders in ESG, right? As well as, I mean, this huge ambitious program they have to make all buildings ESG compliant in the next 5 to 10 years. So thoughts at a time when everybody's abandoning office buildings?
I think Europe has had terrible policy as it comes to wanting to do the right thing, and their execution has been flawed. Even before the invasion of Russia into the Ukraine, they had shut down nuclear and basically tried to transition faster than possible to renewables only. And the costs that these governments are having to pick up as a result, which is only exacerbated by their dependency on Russian natural gas, really put them in a difficult spot. Unfortunately, they managed to survive the last winter. It still remains to be seen now how the next one will go. But I'm very leery of government policy, driving change. But I think you have to buy things as a contrarian. Europe is cheap, and I think that's where I'd be putting money. Have a longer time frame.
So I would just make two comments about what's interesting is I agree that policy is very screwed up in terms of execution. The well-meaning intent screwed up execution. However, if it weren't for Germany, we wouldn't be on this dramatic cost curve that solar is now 95% cheaper than it used to be, because the German government really funded a lot of that curve, to our and China's benefit, because now we're all producing solar cells that are cheaper. One thing I would just say from the innovation economy, I don't think this is going to make up for the lack of manufacturing or other things, but I will tell you that I'm looking at some entrepreneurs in Europe, and oh my God, the quality there is just incredible. Relative to 10 years ago, they didn't even know the word entrepreneurship. So I'm seeing a lot of activity that is rivaling Silicon Valley happening all over Europe, partially because there are customers that are local that are buying technology, whether it's around climate, AI, or whatever.
I would just make the comment, I'm not an expert on the European economy, but what we are seeing is that the larger funds in Europe, some of which are our clients, they are moving to what's called Article 8 or Article 9 requirements for the investments that they make, which requires there to be an intentionality of impact or investment or ESG in the funds in which they invest. So it may not be coming from the public sector, but it certainly is going to be coming from the private sector.
Yeah, and part of that new regulation that just came out, I think last week, is that they're also going to require more transparency of supply chains. But back to Marty's point about the BRICS, I feel like Europe has never been more worried about the trends in geopolitics, and I feel like they're working harder and faster and are getting more innovative since the war in Ukraine. And when I meet with investors who are, for example, Swedish American, they're way more worried than your average American on trends in democracy. And if I had to do it over, I would have launched in Europe first.
Well, I guess the question is, even though they're moving fast, there's no doubt that the position of OPEC Plus is stronger than ever. So Russia is part of OPEC Plus, and it's in no danger. So, and now Europe has no source of energy outside of the United States, or
Canada, yeah.
Canada.
Norway, yeah.
Yeah.
They abandoned their fossil fuels before we did. Yeah, and look what happened.
Well, I'm saying, I mean, so they need it for manufacturing purposes if they want to be an ongoing, institutions, governments, et cetera. So I'm just saying there's a rush through this. I'm 100% in favor of carbon neutral and zero carbon. I think there's a lot of ways to do things with clean carbon. And I don't think we need any energy alternatives. I think nuclear is great. It's a shame that we kind of let Russia buy 80% of the uranium in the world. So it seems like every time that there's a strategic thought on how to do this, our government is in the wrong place. Right? I mean, I just had to, right, from a strategic geopolitical perspective, we are just bad at it. We are not chess masters.
Yeah.
We're playing 1D chess.
Yeah, we're reactive.
Or checkers, thank you.
Yeah.
Right. It's not 4D chess we're playing.
Right.
We're outmaneuvered every time. You look at the map of China's influence, it's amazing.
And they're much more strategic. Yeah.
Right?
Yeah,
So, yeah,
I just had a comment, do you mind?
please.
Is it positive? Well, so taking a positive tack, right? So if you think about it, in the US, no surprise, I would advocate for utilizing your proxy voting. But if you think about it from a global perspective, really what you have is an ability to force divestment into these smaller countries like you're talking about, these EU, the frontier markets and the rest, they desperately need our capital. So we are able to set new standards there. Having spent a lot of time in the West and Wyoming, really what you see there is they have extraction. They do clean extraction in comparison to China, to India, but yet we limit our own state's extraction. And then we import it from the dirty states. And yet, we worry about the environment. So, it's interesting to talk to like the Wyoming governor who's focused on being carbon negative, because he sees it as a business opportunity. And so what they're doing is they're building the first nuclear plant in 50 years in this country on top of a coal mine.
Well, there's the one in Georgia that's come out also, which will be the cheapest provider of energy in the United States. And it's going live this year.
So my point is that we as consumers, as Americans, have an opportunity to really start thinking about what is our impact globally and where are we putting our money, and then, and limiting it on the outside and holding the same standards that we hold to our companies internally as they do externally. And in fairness, that is what's happened with the with car batteries now, with the new regulations, right, where they're making sure that at least a portion of the lithium's coming or being processed here in the North America. So we are seeing evolution, but I will say that the other person to check out is Nouriel Roubini. He's out with this crazy map. It's a little frightening. Yeah. Basically, what he's saying, that's Dr. Doom, the guy that predicted 08. But basically, what he's saying is that we are heating up faster than we expect, and so it's only going to be very little amount of the U.S. is going to be inhabitable. He's basically saying the same thing. I mean, India won't be, China, and they're all going to need to go to Siberia. But it's interesting data points. But my point there is only pain, hurricanes, heat. That is going to motivate us, unfortunately, because I don't see us going.
Yep. I think Nouriel Roubini is a pretty failed economist, right? So he shouldn't be predicting the weather, right? I mean, he was raised $35 million to start his firm, and he lost it all in 5 years, right? So because he couldn't produce more than $2 million a year in revenue. But the remarkable thing is here in California. California sits on 3 billion barrels of proven oil reserves and produces 1 million a year, which is just remarkable. And since 1995, that's when it was proven. California has lost 15% of its energy that it produces. So even with all of the renewable energy it's added, it's actually losing hydro faster than it's creating new sources of energy. So that's to import all of its energy, right? And I think that the loss of hydro, first on the West Coast, because you're losing it in Oregon this year, it's going to happen in Washington State in the next 3 to 4 years because of salmon migration, right? And it's going to happen in California because of drought and water mismanagement. And it's going to happen in the rest of the United States because nobody can support these dams, this hydropower. So there's going to be a massive loss of hydropower in the United States. Right, there was a dam that collapsed, was in Indiana or Illinois last year, 2 years ago, were wiped out of town and killed 50 people, right? All these dams were built in the 1930s and nobody's done any maintenance on them. Just look at, you look at the roads around the United States, nobody maintains them either, right? So it's hard, a dam is much harder to maintain. So it seems like we're kind of like running in place. Thoughts?
Yeah, there's an article, 1 billion barrels of oil in the Los Angeles basin. 1 billion barrels. Signal Hill and where I grew up, Montebello, were some of the biggest oil fields there. And they've shut them down because people don't want to see an oil well there. But Los Angeles has a fantastic amount. And so if you ever get in a crisis, you could actually squeeze all these bad guys out by just producing it right there, but it won't happen, right?
It's the most expensive energy in the United States is here in California.
Yeah, it is, yeah.
Any thoughts on that?
Well, I'd just like to add on to it. Ironically, there's a NOAA study that shows the majority of the smog in California is coming from China. It drifts across.
Like the balloon?
That's hugely ironic because Asia will become the manufacturing center of the world, and all of it will drift over here, right?
Marty, on dams, 90,000 dams in the U.S., about only 1,500 actually produce energy.
Right, and of those 1,500, how many of them are actually maintained?
Well, there's the point in the opportunity, right, is that we're going to have to maintain those 90,000 dams, and there's an opportunity to retrofit.
It's a huge expense.
All energy sources on the table, that's my point. So
Any other thoughts on that?
I feel like we should end on a good note.
Yeah.
Oh yeah, again, so we have John Molina speaking, and he's a huge investor in carbon neutral technologies, right? He actually has a technology that will take the waste from oil and like liquid natural gas, and it will break it down into components, and the oil companies buy it back. So, from a private equity point of view, because it's not venture capital what he's doing, he's got an off-taker, right? And all that matters in life is if you have a product and somebody buys the product from you and they guaranteed it in a contract, that's pretty good, right? And that's what people need. It's not a leap of faith sort of intervention. It's hey, this works today, so I don't have to be innovation economy. I'm just, hey, this is very practical. I can make it work today. And he's invested in 10 of these technologies that work today where there's off-takers. He's just trying to scale them all up from a private equity point of view, right? So none of these are venture capital. They're all private equity. It's all human smarts, human engineering, whether it's scrubbers on coal plants or whatever, right? So we're giving up all of our coal plants while China and India are manufacturing their largest coal plants ever, right? Without the same scrubbers.
Exactly.
So there's a smart way to approach this in a rational way. That's what Tyson has been getting at for the last 2 years, really. So Tyson, any thoughts? You want to close it up?
Yeah, let's have some final thoughts from our panelists. And if I think of something, I'll say something at the end. So Julie, how about you? Final thoughts?
Well,
And
I think the
Raj,
theme here has
and
been there's no one right answer, and everything has to be on the table. Raj said that well. But your average American needs to be more aware of what's really going on. If someone could put all of this discussion in an article, and if it could be seen as the truth and read in a reliable media source, that would be a step in the right direction. And more forums like this. So thank you for putting this together.
Yeah,
Raj?
no, I think,
Oh,
sorry.
Deborah, go ahead.
Sure. I'd agree. It needs to be more grassroots. And so I think showing people the value of it, but through the value of value creation. It's not an either or choice. You can have both.
So, my final thought on this is that we need to do everything we can in a lot of different ways. Everything has a role for it, like we were talking about, private equity plays. So BCG did a study and said that to get to a net zero planet by 2050, 65% of that cut in emissions already exists with the technology we have today. What it needs to do is move a lot faster, which means also financial innovation, not just technology innovation. We need to fund it. We need to get it going. The 35% still needs work on it. That's where venture capital has a role, I think, to play. So venture capital is not the only answer, but it is part of the solution that's there. And whatever we do have to be mindful of not putting more carbon into the atmosphere, because that's not an option either. So let's figure out the ways we can be really creative with the resources we have.
On that note, I'll say this. EQT Corporation makes a compelling argument in my mind that we have a lot of cheap natural gas in the US. And if we deliver that and displace all the coal burning electric facilities in India and China, we will go faster at reducing carbon than virtually everything else that we're doing currently. And I think that there is there's a lot of logic to that. It's technology we have presently. And one geopolitical benefit is I think that we are displacing a lot of the natural gas production and economic strength that is fueling the current Ukraine war by this effort. So that's one thought. But I think it is in all of the above. So, what Raj is doing and what Julie is doing, I think all points in the right direction. And I would not look for government to solve this. I think that, people need to write checks and think and understand how that money gets deployed and how it helps.